The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
And welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. Shares in Coreweave pop after the AI cloud provider beats on the top and bottom line, while Supermicro also gains as the data center infrastructure stock issues up big guidance.
Futures in a holding pattern as investors await the latest US inflation print. The headline figure is expected to come in at 3.4%, with no clear consensus on how the Fed moves next. Oil extends gains as attacks on shipping heighten supply concerns and raise fears of escalation, while a top Iranian security official doubles down on Tehran's demands to reopen the Strait of Hormuz.
It was quite a day for markets yesterday, a reversal taking place across the board on the back of what have been a lot of records in recent trading weeks. The Dow down to the tune of just over 1/3%. Big moving stocks, the likes of Alphabet to the downside. We saw the S&P 500 also slide by a similar amount. A slightly stepped up selling on the Nasdaq 0.6 there. And again, it was Alphabet leading the moves lower. What we had in terms of some of the sectors, FANG plus stocks, they were down. So some of the tech euphoria just coming into the mix yesterday and fading. So just seeing the flip side of that trade. And banking stocks, though, you did see a little bit of appetite there. That was up about 8.10. So in terms of the technology trade that we've seen to date, thanks to some of the earnings coming through, it just seemed to lose a little bit of steam in session. But let's just take a look at US futures to see how we are perched, because a lot of numbers again after hours from the tech stocks. And what we're seeing is the Nasdaq seen higher at this hour, expected to gain modest territory along with the S&P 500. And speaking of tech news, Coreweave shares surged in extended trade after the key AI bellwether hiked its capex forecast on the back of earnings that beat on both the top and bottom lines. The company now sees capex coming in at $39 billion this year. That is up $4 billion from the previous top end of its range. This as it reported a revenue backlog of more than $100 billion, up nearly 250% on the year, with another $25 billion in net new customer commitments so far this quarter. I mean, these are monster numbers we're talking. It will bring a measure of welcome certainty to investors, especially as Coreweave says more than half of the backlog is attached to a contract where customer delivery has already begun. Our US colleagues will continue this conversation, speaking to the Coreweave CEO, Michael Andretta, at 2 o'clock London time. Don't miss that conversation. It is at first on CNBC. And switching over to shares in Supermicro Computer, which rallied almost 8% in extended trade after the data center infrastructure company topped expectations for Q1 earnings and revenue guidance. The company now expects up to $15.5 billion in first quarter revenue, ahead of an estimate for $11.7 billion. And don't forget Cisco on later too after the bell.
And all of that setting the tone for the Asian trading session. This is the picture across the main equity markets in the region as things stand. The Nikkei 225 returning after a public holiday and very decisively in positive territory. Some of the other big tech names helping to lift the Korean benchmark, the Kospi, as well as we're seeing positive moves on the Shanghai Composite. The Hang Seng trailing the pack there, off by around 1%. I mentioned the Korean tech names. They have rallied on the back of that positive update from Coreweave and Supermicroelectronics, Supermicrocomputers. We've seen, look at that, Samsung up almost 7%, SK Hynix, the other big chip maker on the Korean index, up more than 5%. They are a big part, they make up a big chunk of the Korean index, more than 40% of it. So that has helped to lift the broader benchmark. In terms of what's expected in Europe when the trading session gets underway, this is a slightly more negative picture than we've seen in Asia currently, but investors moving cautiously, it's fair to say, ahead of that US inflation data. Very much a split view on what the Fed does next, depending on how hot the print comes in for those price rises. And in fact, let's delve into that in a little more detail, because today's CPI report could well end up being pivotal for the Fed's next decision, which is due in September. Indicators are all in place to push investors to expect another hot inflation print, with Brent crude trading around 25% higher since the start of the Iran war. That has helped to push the annual CPI figure up by nearly 2 whole percentage points since the beginning of the year. Inflation coming in at more than double the Fed's target in May raised expectations of an interest rate hike, but then June's print, came in markedly lower than expected, as did the figures for the other part of the Fed's dual mandate, employment. The US economy has actually started to shed jobs, according to July's non-farm payrolls report, which came in at minus 20,000 compared to expectations of an 80,000 uptick. Now, today's inflation figure is expected to come in at 3.4% on the year, nearly 1.5 times the Fed's 2% target. Yet investors are very much on the fence on what that means at the FOMC's next decision meeting. What do the banks think? Good question. Bank of America says that June's soft figure was a one-off and that a strong print today will put a September hike in play, pending next month's PCE reading. Meanwhile, Wells Fargo points to the spectre of stagflation, especially after July's negative jobs print. What does Paul Donovan at UBS think? Well, he can tell us himself. He's the chief economist there and joins us live now. Paul, what's your take on it? The jobs figures suggesting that the Fed would be inclined perhaps to cut or hold rates. The inflation figures pointing more towards the need for a hike. What's your take?
Well, I think with the inflation numbers, what we've got to look at is the direction of travel. As long as inflation is slowly coming down, I think the Fed is going to be content to hold for the time being. And that, it has to be said, is the view of quite a large majority of economists in the markets who are suggesting that the Fed should be on hold while we see disinflation forces slowly coming through. The main driver of inflation at the moment is the oil price. If we look at core inflation, which is what the Fed focuses on, if it wasn't for the oil price, core inflation would be about 2% today, because oil prices affect things like airfares, which are part of the core inflation number. So we're in, I think, a relatively benign picture. As long as that inflation number keeps coming down, albeit slowly, I think the Fed is going to be content to sit back for the time being.
And yet we've had this sort of sequence of inflation prints, not just in the US, but generally, that has proved expectations to be quite wrong. I mean, the last US inflation print, much lower than expected. Do you think the inflationary fears have been overplayed and overblown?
I think that there has perhaps been a little bit of a problem coming back from the 2022 inflation episode. Now, the 2022 inflation episode, or really 3 inflation episodes back to back, was a very, very unusual set of circumstances. And the problem with that is that it doesn't matter that 2022 was a really peculiar set of circumstances. Your mathematical economic models are still going to incorporate that peculiar outcome into their history when they're trying to consider the future. So that may at the margin be giving us this slight skew. It's certainly the case that very recently, most of the inflation numbers have been coming in lower than expected across the developed world. I mean, it's not just a US thing, not dramatically lower. It's not like, my goodness, we're heading into deflation territory. Nothing like that. But the numbers have been coming in just a fraction lower than expected across so many countries. You do have to wonder if perhaps there's been a little bit of a pessimistic skew on inflation, just a small one, coming through from over-reliance on that 2022 experience.
Paul, there's been a lot of variables too. We talk about the tariffs and the fading effect of those tariffs as we see various changes on whether they can be applied or not applied, as well as the situation through the Strait of Hormuz that has been incredibly elusive trying to achieve a resolution. What do you make of the potential, though, for higher oil prices if we still see an unsettled situation persisting?
Well, I think the first thing we have to acknowledge is that the price the consumer is paying, the gasoline price, the diesel price, is already a lot higher. Now, most consumers in the States think that, the fair price for a US gallon of gasoline is somewhere around $2.50, certainly below $3 a gallon. And here we are well over $4 a gallon. So the inflation perception around oil prices is already very negative. And the higher refined oil prices is reflecting the disruption not just to the crude oil supply, but also to the refined oil supply. So we've got to bear in mind that we've actually probably seen a bigger oil price impact than the crude oil price suggests.
The
what
IMF,
we've got now, of course, is people have adapted. So that's an important point. The oil price is not as potent as it used to be, but it is a damaging effect as far as consumer perceptions are concerned. And that's where we've got to be concerned. That has political consequences, and it might change consumer behavior. No evidence of that so far, but it's something that maybe next year, persistent high oil prices could be a damage to consumer behavior.
Yeah, I was just pointing out the IMF also indicating in a blog that we are seeing prices not really reflect the shortage that exists out there. I want to bring up to the chip story, Paul, because chip inflation, we've been watching it play out in real time. We've seen Apple having to absorb a lot of those costs, and it's not just one company, it is across the board impacting a lot of the producer prices and spilling across now into consumer prices as well. How serious is the chip inflation story in your view?
I don't think it is something to get overly concerned about. We've got to remember that consumer electronics, although it seems they dominate our lives because of course we can never be off our phones, in actual fact they're quite a low weight in the overall consumer price inflation basket. So that's the first point. And the second point is that we have to remember that actually, when you go out and you buy an iPhone or whatever, you're not really paying for chips. The chip is a tiny part of what the consumer's paying. Most of the cost that they're paying for is labor cost in the wholesale and retail and distribution, and then the fancy packaging that it all comes in, and then the advertising campaigns, all the rest of it. That's what you're paying for. And so when you break it down, the impact of higher chip prices on the consumer price paid for electronics and the impact of that then through to the inflation number, I wouldn't dismiss it entirely, but it's not a key indicator as we look ahead.
Paul, the market looking for some clear signals around CPI today and price stability, but the bigger issue seems to be managing this economic cycle. This incredible AI build out, whether it's sustainable or whether there's circularity risk, something that's going to bring this whole big investment wave unstuck. What's your interpretation of the facts we have today and whether the risks are elevated?
Well, we've got a complicated position here, of course, because a lot of the drivers of growth, particularly in the United States, are very, very narrowly focused. I mean, for example, most people in the United States, the overwhelming majority of the population, are living in a European economy. They're experiencing European-style growth rates, European or sub-European living standards. What you've got is a very concentrated growth story, very focused on investment and particularly the AI build-out. Now, there's nothing wrong in that particularly, but it does mean you get a slightly distorted picture. When we look at the underlying consumer spending, the consumer balance sheet does remain strong. That is something I think that still sustains us going into the end of this year. And that's been the really unusual feature of this whole crisis. The consumer's strength, their ability to draw down their savings rate, and on some occasions to tap their stock of savings to maintain consumption, that's not something we normally experience. And that's been the structural difference this time around, I would say.
Paul, just while we've got you, I want to get your thoughts on one of the other big sort of macro factors that's at play today, and that's the yen. I know you've written about it in your daily note. It is heading back towards 160 to the dollar, giving up a lot of the strengthening from that joint intervention. What happens next with that, and what does it tell us about America's ability to influence the bigger global economy in what would have traditionally been seen as its role and its strength?
Right, so let's go back to the basics here. foreign exchange intervention works under one of two circumstances. It works if there has been a speculative attack against a currency, and it works if you use the period after the intervention to change the policies that have caused the currency to weaken in the first place. So either there has to be a speculative attack, or you've got to change the economic fundamentals. Well, I think you've just got to look at a chart at the yen to see this wasn't a speculative attack. The yen has been weakening over a period of time. And so I think it's very hard to portray this as sort of speculators hurling the dice on the currency and gambling away. And so the intervention has got no speculator to defeat. Has there been a change of policy, either from the United States or from Japan, which is going to change the drivers of currency fundamentals? There has not. And so you're not seeing anything, I think, particularly unusual. The yen was trading at what the market thought of as fair value before the intervention. You get a period of intervention, which is a very big distortion in the market. And once that distortion has passed through, the market tries to go back to the perception of fundamental fair value. So yes, inevitably you're going to see the yen weaken unless we hear a different policy position coming out of the United States or out of the Japanese authorities. And we're just not hearing that at the moment.
OK. Paul, thank you very much. Paul Donovan, Chief Economist at UBS GWM. Still to come here on the show, new attacks on shipping also raise escalation fears in the Middle East as Iran's newly appointed National Security Council Secretary insists the Strait of Hormuz will remain closed until the US accepts its conditions. Dan will bring us the latest. Plus, countries are taking more extreme measures to tackle drought, wreaking havoc across Europe. Some of those measures may well surprise you. Sam will join us to explain more after the break. And we'll delve into Q2 earnings with Vestas CEO Henrik Andersen. That conversation is coming up at 7:45 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. Ukraine has given US negotiators fresh proposals to end the war with Russia, according to President Volodymyr Zelensky, as talks to end the more than 4-year conflict remain largely stalled. The Ukrainian leader did not offer any details on the proposals. Zelensky also said Ukrainian intelligence has evidence that Russian President Vladimir Putin will use next month's parliamentary election results to announce a new mobilization. President Zelensky has said that Russia used ballistic missiles supplied by North Korea in an attack in the southeast of the country. In an address, he said that for the first time, Russia could not fight without reinforcements from its ally. However, provided no evidence for his claims. Ukraine has reportedly halted its campaign of drone strikes on oil tankers in the Black Sea following a request from the US Vice President J.D. Vance. According to the Financial Times, citing Ukrainian officials, Vance asked to stop attacks last month after it became alarmed that the moves were further destabilizing oil markets and harming US companies.
Iran's newly appointed Supreme National Security Council Secretary has doubled down on Tehran's stance that the Strait of Hormuz will remain closed unless the US accepts a series of conditions, including an end to the war and release of frozen assets. This despite mediators on Tuesday signaling progress towards an agreement. Separate attacks on shipping also raising escalation fears. The US said it disabled a Panama-flagged vessel attempting to violate its blockade against Iran, while 6 people were killed in a suspected Houthi attack in the el-Mandeb Strait. Let's get out to Dan for more. Dan, it feels as though the negotiations are going on with live artillery at this stage.
That's right, Karen. Negotiations at a stalemate. And then, as you flagged, we've also seen fresh attacks on shipping that are really keeping escalation fears high across the region. As you mentioned, in the Gulf of Oman, the US military says a Navy helicopter fired 2 Hellfire missiles at a Panama-flagged cargo ship after it ignored warnings and tried to breach the US naval blockade on Iranian ports. That strike reportedly disabled the vessel. And then in the Bab el-Mandeb Strait, Yemen's Houthis have been blamed for a deadly attack on a cargo ship. 4 crew members were killed along with 2 Yemeni rescuers in a follow-up strike. The attacks coming as hopes for a quick end to the US-Iran war continue to fade. On the issue around the Strait of Hormuz, well, Iran now says the strait will remain closed unless Washington accepts its conditions, effectively doubling down on that previous list of demands. And then on the other side, President Trump, of course, insisting that the US remains in control of that waterway. And then we've had regional reaction as well that I wanted to bring you across this morning. This is from the UAE presidential advisor, Dr. Anwar Gargash, who says the region cannot remain in a state of neither war nor peace indefinitely. Meanwhile, the US Energy Secretary Chris Wright also weighing in. He says almost 9 million barrels a day are now moving through Hormuz, with total regional oil flows at around 15 million barrels a day. Important to point out here, though, that Hormuz estimate well above some independent tanker tracker figures that we watch closely. So these numbers from his part of the administration are being treated with some caution, but nevertheless, the US still optimistic that ships are being able to pass through the Strait of Hormuz effectively under US control here, bypassing that US blockade. Of course, the Iranians would argue otherwise. So the situation remaining effectively in a stalemate at this point. And of course, oil prices also pushing back towards that 90 USD handle on Brent as traders continue to digest this escalation and these latest headlines.
Dan, I've got to ask you about the security tactics by the Americans in Turkey last month. The Washington Post effectively breaking cover on this story about how the president was moved from Air Force One to a military aircraft trying to protect his security. It's been an incredible story.
It's extraordinary, Karen. And what's also interesting is the fact that the president has all but confirmed that this happened. 2 points to make here. I think, first of all, an extraordinary play by the Secret Service in the United States, responding to what was believed to be a genuine and real threat from the Iranians on the president's life that ultimately resulted in him being forced to switch planes while on the ground in Turkey. The second point to make here is that this was not necessarily your typical executive transfer switch, right? Because there's also a bit of an uproar coming out of the United States. The fact that journalists were left on board the original Air Force One, which was being used as a decoy, certainly raising some eyebrows among the press corps stateside.
Indeed, Marco Rubio on that plane too. Just extraordinary. Dan Murphy with us. Thank you so much for that. I want to push on to Foxconn. Breaking news at this hour. This is a closely watched company for the extent of the AI demand story right at source. And as you talk about the key supply here to many of the major device makers, the company has produced Q2 net profit of $59.97 billion. This is slightly above analysts' expectations. On 2026 revenue, expects to see strong growth year over year versus the previous forecast of strong growth, so that remains intact. In terms of what we're seeing on the revenue for the cloud and networking products, to see strong growth there as well. Revenue for smart consumer electronics to see significant growth, so slight change in terminology there versus the networking product side. And the company also going on to talk about components and other products seeing significant growth there. This does give a fairly strong view as it talks about AI infrastructure is driving growth. I think we all know that when it comes to the data center, that is very much a driving force. So that is decent. 2026 AI server rack shipments to more than double is the line that is crossed in the third quarter. AI server rack shipments to rise high double digits on the quarter. And we are, of course, seeing that play out in other companies. So I think just a reflection almost of what we're seeing from the other big tech players. And we saw it overnight in terms of Coreweave, Supermicro also talking about the demand coming through for compute.